Hey, it's Rav. Welcome to the Everyday Investor TV show, the hottest investment show in the world. That's right, I said it. I don't care who knows it. This show is designed to help us all grow our money. You see, the challenge often is that we take our time, we go to work, and if we have a job, we are blessed. We get a paycheck in order to eat. Let me say that again. We take our time, we go to work, we make money so that we can provide. Now imagine a life where money could make you money so that you could take your time, use it for still working, but you could also spend it with family, friends, engage with into a purpose that's greater than yourself. That's why the Everyday Investor TV show exists. Each week we bring in an everyday investor that teaches us a different strategy. Remember, whenever you're faced with any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on my investment? You should already know what you are comfortable with, because if it's too low for you, now you can pass and you can enjoy another conversation talking about the Raptors or the Leafs or the Jays or whatever else you want to do. But always ask, what's the return on investment? Number 2, when do I get that return along with the money that I put in? Because if somebody says return on investment is 20%, but it's over 5 years, then really you're only making 4% annualized. So you want to make sure that you're asking, when do I get that investment? 3, what is the minimum investment amount needed? And 4, very important, you look at them in their beautiful little brown, blue, green eyes, and you ask them, what is the risk? What is the downside? If they can't answer that, run really fast. Thank you for watching. Don't go anywhere. We've got a great show. Coming up, we're talking to my good friend Mandy. She's teaching us how we can make great returns investing passively.
So my saying was, I don't get out of bed for less than 30%, which was a minimum, like you said, 15% for my investors, 15% for me.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
Hi, Terry Lynn Legault from Canada's Mortgage Choice here. Have you been working with a bank and been denied because of poor credit or no credit history at all, and you're looking to get into a mortgage now but having those issues? Did you know that there's alternative lenders that will look at those scenarios differently? And if you have been building to improve that credit and been saving some money on the side, that we may be able to get you into a mortgage now. It may mean that you pay a higher interest rate for a shorter term, but we can still help. If this is setting home with you and you are looking for that alternative lender, contact us today at Canada's Mortgage Choice.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rob. Welcome back to Everyday Investor. I'm talking to my sister, Mandy. Mandy, it's been a long time that we've been able to connect. You've been so busy, I've been busy, but it's great that we can connect right here on TV.
I refer to you as one of my favorite humans, Mr. Rav Toor. Love you.
That's so sweet. I love you too. You know, I was telling my wife, not that long ago, that you gave me one of the best pieces of advice. And, I really took the last decade off to enjoy my children, 10 and now 20, my kids pretty much close in age. My son especially, I would feel insecure because, he was just kind of his thing. He was really confident in himself and didn't need a lot of, didn't communicate a lot. And I'm the opposite, right? I'm touchy-feely, what I'm thinking, feeling. And I was like, Mandy, what am I doing wrong? And you said to me, Rav, why do you think you're doing something wrong? Maybe you're doing everything right. He feels so loved that he doesn't have to respond in a way that I would want him to. So I never forget those words of wisdom. And plus, so many more. But what's happening with you? I see you kind of on a teaching circuit with a group of people traveling, and tell me a little bit about that. Are you becoming your own teacher, coach, mentor? I mean, people give you money and you help them grow it, but are you also now teaching?
So a beautiful saying that has resonated with me: you can help 1,000, but you can't carry 3 on your back. I did not create my own coaching company because there are some amazing people that already have the wheel invented. I don't need to recreate the wheel. I just needed to be able to find something that met my core values, that spoke my language, that teaches the ethical ways that I do. And I just hooked up with that. And so I'm actually, this is the first time that I've ever coached anybody. Now I'm able to truly guide people around and give some high level viewpoints of what's going on, in the time that I have been around in the real estate market, done the trajectory of growth in my deals. Like you were saying, small single families was the first time that we connected, and we're doing some burrs and some small duplexes, and we did a turnkey, and this is just that next logical step.
And next logical step, you meaning getting into multifamily, maybe apartment buildings, that kind of thing?
And standing on stages. So instead of, one-to-one helping, instead of, it's like, how do I say that same message? And beautifully, with people like, can I take you out for coffee? I was like, can you organize 50 people and you can all take me out for coffee? Because the knowledge that I'm sharing, people are like making notes. They're just like mind blown after a 20-minute phone call that says, shish, nobody's given me that perspective. And I'm actually, a lot of people find it refreshing, Rav, that it's not the same. It's not always easy. Like, let's look at the hard way, the hard directions. Let's ask some hard questions, because sometimes around those hard questions is a path that is actually a path that they want to take. So,
Mandy, I know you won't share it. That's why I need to ask you, before we even talk about what you're going to, start doing, or what you are doing and going to continue to do, tell me a little bit about your resume. So you were buying single family homes, turnkey, meaning no work needed to be done. You were in a small town, an hour or so north of Toronto, and you were crushing it. You are crushing it. You were making money on the increase in value, making money on a tenant paying down the mortgage, making money on the difference between the expenses and what the tenant's paying. We call that cash flow. And you were doing that with other people's resources. We call that JVing, joint venturing. So if Rav has some money, I could give it to you, entrust in you, you do all the work or get the work done, because you're not a working partner per se, you're the expert partner. How many of these joint ventures have you done to date?
About 150 in 8 years.
Wow. 150 in 8 years, where you're doing all the business, and all Rav had to do, if I wanted to do 2 or 3 or 5 or 10, all I needed to do was go on title, give you the money, and I would enjoy returns, because you were saying, Rav, I'm not even doing this, and maybe it's changed now, I don't know, I'd like to hear. You're not even doing this if we're not making 25, 30% as a minimum annually. So that means I get to enjoy 15% passively. You enjoy 15% by doing the work, but not necessarily having to put in your own capital for these ones. Talk a little bit about that. Does it still work? We're in 2023 here in, kind of the winter spring market. Does this model still work, and and how does it work?
So my saying was, I don't get out of bed for less than 30%, which was a minimum, like you said, 15% for my investors, 15% for me. And I felt that was actually in early 2022, with all, there's lots of turmoil kind of going on. I realized the power of this joint venture model, of this come with me and we can invest together, because people were secured on title. There's no risk of somebody over leveraging, because the banks don't over leverage. Our investments were very boring, meaning that we rent to average people. They're not, cyclical of Airbnbs. They're not executive luxuries. They're not condos in downtown Toronto where there's one tenant and away they go. So these investments just became very stabilized. And we could turn to a lot of different A lenders. I love A lenders for my partners, because it's a matter of keeping all the costs low. And so the strategy that I had for my investors to be able to maximize their mortgage qualification space. And so by being very strategic about which assets in which city, in 2020, when the world was shut down and I was bored, you could still buy houses. So we went up into a small northern market in Ontario, and we went up there and bought 46 properties in 9 months. Which meant that they were getting the discount, making money in the buy. So when I'm offering these returns, they're not made up returns. They're not speculated returns in the future. We were actually making money in the buy so significantly that was a big portion of why I was able to offer these returns. So your question was, is it still appropriate today? Well, I think that's really important to acknowledge that you move and adapt. And if a model used to work in 2017, 2019, but you find that it doesn't work now, don't keep doing it. I'm happy to be able to share that my current investment is a 29% annualized return over 10 years. So I'm still able to get the high returns. But as I'm saying, the strategies change because the timelines are longer. I like to use words like wealth preservation. So it's not a get rich quick. And maybe that's what's going on a little bit differently in the marketplace right now. It's not wham, bam, thank you, ma'am, I can do this and move around and things are fast. So we just have to breathe some patience into our investing and understand that the markets are going to change. We have, but what are the basic fundamentals? When Doug Ford in Ontario said, when the pandemic hit, I want you to buy food and pay for the roof over your head. Now, there was a little bit of confusion. Did he say don't pay your rent or pay your rent? Never once did he say don't pay your rent, but I realized that my business model had a basic human need. And if I breathe that into the viewers to remind them that, yes, this is about us making money, but it's also about us providing a basic human need. And if, the country is going to continue to be a new home for thousands, hundreds of thousands of people over the next decade, we have to be able to continue to create units and understand that there will always be a need for someone to live in our units. So if you build it, they will come. Build these units, find these units, bring them to a state that you are happy to be able to offer this as a business, right, to your client who is a tenant. Then you will always have a lineup of customers waiting to rent your product. And I hope that breathes some patience into people. And maybe it's not fast and glorious, but it is just tried and true and down to the core values of what we as rental housing providers are providing. Yeah,
no, it's great. Listen, I heard you say you're now doing something. It's 10-year kind of plan. Investors, you guys are enjoying 29% annualized. I want to know why the old model doesn't necessarily work today, but let's take a quick break. When we come back, we'll continue with Mandy, who is a wealth of knowledge and just a great overall human being. Don't go anywhere. We'll be right back.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
Hey, what's going on? This is Kyle here from Kyle Ford Mortgages. On today with my better half, Chelsea. We have a very exciting announcement. You've asked, we've delivered.
We have a really exciting event, so mark your calendars, June 9th to 12th. We have networking, mastermind, some awesome content. We have a pool party, a beach party, a black tie gala. We've got it all, and you can rent your very own cottage or have an awesome room at the Kiwi Motel.
If you're looking for all things real estate, whether it's short-term rentals, long-term rentals, private lending, creative financing, whatever it may be, not only great content, but great people, good times. You absolutely do not want to miss this. Make sure you check out the link.
Now, when I show up on Everyday Investor, it means there's a condo deal to be had. Now, what if I told you I had condos in a 50-story tower by a AAA developer starting in the 400s, and not in Hamilton, but right here in Toronto, next to a major transit hub? Too good to be true? It's not. Kipling Station Condos, 50 stories, next to the Kipling Transit Hub, brought to you by CentreCourt. Reach out and let's place you in this fantastic opportunity.
Hey, it's Rav. Welcome back to Everyday Investor. I'm talking to Mandy, who is the joint venture queen. All that really means is people like you and I can give her our money. She's done over 150 joint venture investments, making great returns for her investors. Mandy, thanks for being on the show. I know you're really busy. You're traveling, you're teaching. It makes sense. You know, people ask me, you know, Rav, you highlight family life and so on and so forth. And can I get with you? Can I get with you? Can I get with you? And I want to get with everybody. But the challenge is, if I really value family and you want to get with me because I value family, well, then you getting with me takes me away from my family. Like it's one of those weird, kinds of things. And it's somebody's like, Rav, how come you don't write a book? Mandy, how come you don't write a book? Well, for me, maybe you have, I don't know, but for me, my mind and my heart and my perspective is always changing, that it would be just an injustice if I wrote a book, because what I believed yesterday might not be what I believe tomorrow. And so, yeah, we have to be really prudent and wise. And so I want to get back to really quickly, why does the turnkey JV model not work for you anymore? It still might work, but you're not happy with it per se. And why is that?
So purchase price has significantly changed. Even if there might be a slight, down coming right now, purchase price just exceeds the value that the lenders like. Why? Rents do not keep up with the cost of the new building. There is less people moving. Landlord tenant rules. So let's just say you did buy a turnkey asset and you're like, I'm going to nicely talk to my tenants and see if I can, maybe transition them out of the building. Landlord tenant rules in Ontario are there for a reason. I don't want to say good or bad because I believe in them. I think they keep people in their house. So cost of the house is very high. Interest rates right now are very high. Landlord tenant board does not make things very advantageous. And so for those reasons, I do not turn to turnkey small 2 to 4 unit buildings anymore.
Okay. So I put single family home, but you're talking even 2 to 4 units. For these reasons, people can still do them, but for Mandy to enjoy great returns for herself and her investors, this is what you're no longer doing, even though we did north of 150 of these.
So I will say it here on TV to you and to your viewers. I don't believe that the single family home actually is a great investment these days. They will surpass the value, and they're leaving so much equity on the table. And you'll always know, Rav, when you and I talk, we have our investor hats on, and we are very strategic with our equity and our capital. And so you will often have people who have single family homes, and trust me, there's always it works for somebody, and that's great. But you have beautiful condos worth $1 million and rents are $3,000, and the bank maxes out how much you can borrow, which just means you've got this massive amount of equity. Well, we're too wise of investors. And I say that we are smarter with our cash than the banks. And so this is a great time to realize that those single family homes, those condos that you have that are high in value, rents don't match. Maybe, of course, ask lawyers, ask accountants, talk to your professionals. Maybe it's time to reevaluate your portfolio and say, hey, this is unused equity. What else can I do with it?
Okay, so Mandy has now pivoted to multifamily. What does this mean, and how many doors are you looking at comfortable with for what you're doing and what you're proposing to your investors?
So we currently have a 40 plus unit building in Toronto as our next opportunity. We are looking at 66 units in the KWC region, so Kitchener-Waterloo, Cambridge area, and we have 107 in Edmonton. So some pretty large opportunities that will that's what catches my eye right now.
Okay, so you're doing a lot. This show is across Canada, predominantly in Ontario. So let's stick to Toronto. So you are secured a 40-unit building, and what are we looking at in terms of ROI? When are we exiting this one? What's kind of the minimum investment that you're looking for? And then again, objectively speaking, what's the risk in something like this? So we've got a 40-unit building. What are we looking at an annualized return for our investment?
So for these buildings, we can't judge them based on their return in year one, and we can't judge them based on their return in year two. And I think that's just really important for people when they are going, no properties cash flow. Let me be clear. My properties do not cash flow in year one and year two when there's lots of work being done to them. So we have done a 10-year annualized return. And for our investors, it's a 29% ROI. On their capital.
Just for the investor, not that we're splitting that like we used to. We used to do that with our turnkeys. We're making north of 30, so 15 for me, 15 for you. You're saying for the investor, it's 29%. 29% is your projected return.
Annualized over 10 years.
Yes, annualized. Okay. That is, to be a passive investor, it's pretty significant.
Yeah.
So you're saying we're going to exit in 10 years?
We're going to exit in 10 years. Yep.
Okay. And we're not looking, for this scale, we're not looking for everyone, 1 million people to put in $1,000, too much paperwork. What are we looking at in terms of a minimum?
$200,000 is the minimum investment.
$200,000. And are you is it just cash, or are you doing registered funds as well?
Just capital investments, no registered funds.
Okay.
Yeah.
Perfect. And then the risk. So how is Rav's $200,000? How is it secured? What do I look for? Because people might be offered this type of thing by somebody else. So objectively speaking, Mandy, if you're speaking to your niece who lives in Vancouver and she's approached by somebody, what are the things that she needs to ask? What is she looking for? What are some red flags? Talk to us a little bit about that.
So how is the money secured? I want people to be in an equity position. So red flags are the words promissory notes, just like it's just cash. You need to know, how is my money secured? And so this is you're actually buying shares of a corporation, and the corporation owns one asset, and it happens to be the 40 plus unit building. So like your capital is going into a trust account for your lawyer, and there is a letter of intent, there's a shareholders agreement, and there's lawyers involved. So like right off the bat, there's some really good keywords there.
You said it's an equity deal. Explain what that means, equity deal versus debt deal.
So if you lend to somebody and you are, so let's just say CIBC is a mortgage holder in first position, and maybe your position, you might be lending them debt. Okay. You're in a fixed rate of return. Okay. A debt lender is a fixed interest rate. So you might agree with that buyer or that investor that you're going to get paid 12% on your money. And so at the end, you've got your $200,000 at the end of 1 year or the term of that debt, you get this fixed interest rate. Equity, you're kind of saying, I'm saying, come along for the ride. Here's where we think we're going to land. It could be better. We might find something behind the walls, like you're in for the ups and you're in for the downs, but together we are doing this, where the debt is you are a hard money lender, and you're in for a fixed rate of return.
Love it. Love it. So this is what you're doing with your multifamily space here. And the idea basically is we're finding things that are, maybe undervalued, undermanaged, so on and so forth. And we are creating value to it, which at the end of the day, not to get too complex, but when we, divide the increase of income by the capitalization rate, it boosts the value of that property significantly. So in 10 years, Mandy, are we refinancing? Are we selling to a REIT? Are we, or do we all revisit that together?
We all revisit that together because we're in this together. So in year 5, we are going to be doing a change of financing, like just a refinance. It gets very strategic with the lenders. Actually, in this opportunity, in year 5, all capital is returned to our investors, which means we're asking you, come along for the 10 years, because that's where the big lift is. But the capital is returned at year 5. So if there's a really strategic investor, they will be able to have their capital back and go and do another investment opportunity while they continue to have an equity position in an asset. One of my partners is an ex-Blue Jay player, so I love Toronto. And he was like, Mandy, nobody's ever offered me this before. Nobody's ever offered me an equity position. And I said, well, maybe you're chasing cash flow. And so that's a key word. And a lot of people, I want cash flow. I'm like, but do you really need cash flow, or are you okay with your everyday bills? And he was like, I don't really need the cash. And I said, well, if you don't need the cash, come with me, be a partner. And his net worth has exceeded any kind of investments that he thought he would if he would have just continued to be a debt investor chasing that cash flow.
Yeah,
and so,
because the truth is most people, when they stop and think about it, they want to grow their money rather than have their money spit them out money at this stage, because they're not going to quit their day job. You're never going to have enough cash flow to quit your day job unless that's really what you want to do. But the average everyday investor just wants to keep their day job, but grow their capital so that one day they can have it spit out or do whatever they want. Mandy, listen, people are watching this show. Can they contact you? Your information is there on the screen. Do you mind if they reach out just to pick your brain, whether it's to invest with you or maybe it's not going to be to grab a coffee because you're doing different things, but to be able to have a quick call on the phone, you're okay with that?
I want to be able to make sure I don't want anyone stuck in their problems. If there's a analysis by a paralysis, I'm happy to be that little voice that just gives a little tweak to the way that there's somebody's analyzing a deal, and who knows what's going to be on the other side of that conversation.
Fantastic. Well, listen, Mandy, time flies when you're learning and having fun. Thank you so much for being on the show with me. I really appreciate it.
Thanks, Rav.
Yes. And thank you guys for watching. Without you, we would not have a show. Remember, go to everydayinvestor.com to watch this show over again or any of our past shows. Make sure you also subscribe to our YouTube channel. Until then, we'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. God bless everyone.